Welcome to TheoTrade. This is Don Kaufman. It's November 5th, 2025. Just a few minutes after the cash close here on this Wednesday afternoon. The S&Ps are up some 24 handles. Tell you what, full stop right there. Look, the S&Ps may have ended the session higher, but what's really worth noticing is the range. Look at and this includes the overnight range. I only traded all the way down. In fact, I'm even going to scroll back on here. Traded all the way down to 67.48, and as high, of course, as 68.57. You know, what's 110 S&P points amongst friends? Range is absolutely huge. In fact, I'm breaking this down for you guys right now on a 30. This is again, 30-day, 1 hour, just to substantiate how significant that range happens to be versus some of the other price action. It's like you're in huge waves right now, and you don't really know it because the S&P's finished, up 24 points. It's 0.3%. So it's not much to look at. The NASDAQ, the NASDAQ also having a phenomenally large trading range in today's session. And again, that does include the overnight session. Meanwhile, the S&Ps did in fact fade into today's close. For those of you that do not speak Trader Geek, the fade is, look, for the most part, in the trading session, we're up 50 all day. We faded hard into the close, lost about half the gains on the trading session. The one thing, you look at the tape and so forth, and again, it's fairly bullish today, and, the volatility definitely dropped. I'm not going to argue that, right? Vol dropped a little bit. I tend to look at the volatility futures. Nice little drop here, a decent drop down in even VVIX. That's the volatility of the VIX, although it's only dropping back down to about 100, which is still relatively high. So volatility drops, the marketplace goes higher, but I have to tell you, it is funky out there because there's some huge movement, okay? And in short bursts of time, nevertheless, okay, volatility, trading again, those vol futures around the 19 range. This marketplace, though, just reeks, okay, of risk right now. The other thing that's definitely worth discussing is a lot of people talking about the AI trade and starting to unwind, and I don't see it. I'm looking at stuff like Amazon, which gapped higher last week on its earnings. It's like 1 or 2 days removed from its all-time high. Let's talk about Apple. Okay, Apple. What is it, 3 days removed from this huge breach to the upside? Okay, we'll even get crazy. We'll bring up Microsoft. All right, you got me here. Microsoft is about a week removed from its all-time high. And Google, it's right there. It's basically matching highs. So, where's the heavy risk? Okay, Meta, there's some sell-side activity in here. NVIDIA, mild sell-side activity. Okay, Tesla, okay, butting up basically against all-time highs. And of course, we'll even kick Broadcom on there, right up against all-time highs. So whatever sell-side activity people are talking about expressly inside of AI, you think the world was coming apart. If you actually, put your ear to the ground right now, the bottom line, though, I just don't see the selling. The financials are interesting, though, at this point. The financials have actually come down to a fairly critical level of 52. They've bounced to some degree, but this one's going to be worth watching in just the next couple of days to come, like the 52 level inside of the XLF. I happen to have a position on for this. Look, I don't need a massive move, though. I need a move slightly below the 52 level, which I do think we're actually going to get. I think we're actually going to breach through that level. All right. I want to push some of that aside for a second. As I said, today wasn't exactly all enthralling. The advanced decline lines of 50-50 kind of felt like a slop fest, but it did fade. Again, that marketplace faded hard into the close, and you kind of got to wonder, do we retest tonight? Do we retest some of the lows from last night? 67.48, that's something to look at. It's big. It's a big move. All right. As I said, shifting gears for just a moment. Let's move away from, talk of S&Ps. What's catching my attention? Bond market. This is something I talked about in the weekend update. I said, you got to watch bonds this week. They start to see some sell side activity. It's only a matter of time. Literally, tomorrow, people are going to start talking about bond markets nonstop. if they have any more sell side activity, because the market as a whole is going to be fearful of this. So why do you care? Why should you care? Okay, because sell side activity in the bonds, and this is a fairly precipitous sell off. And yes, I am looking at the 30-year right now. If people are more comfortable, okay, and you're not, comfortable, I should say, looking at the bond futures, maybe you look at TLT, right? TLT coming into this, 89 level, which looks like, a degree here of where there was support in the past. But to me, it's not even about like the bond sell side activity or the TLT. What you really want to start to focus, okay, is when they're selling in the bonds, it's interest rates higher. We just heard from the Fed, and the Fed was like, we're going to cut rates, do a little dance, make a little love, get down tonight, okay? And ever since they've said cut rates, we've actually seen rates go straight up. This is the 10-year, and I want to be very, very clear about where I think there's some fairly critical thresholds. This is the 10-year, and it was trading, okay, almost down to like 3.9%. It shot up quite a bit in the last couple of trading sessions. We're threatening right now 4.2%. I would look for the 4.2% the next couple of trading sessions. I mean, I don't think anything is like, prohibiting this thing from cracking right back to 4.2%. That's 4.2, of course, on the 10-year. From there, it's just a matter of, do we kind of match some of the recent highs, or do we actually explode higher? From there, you start looking at like 4.5. Bottom line is, okay, rates are not going down. It doesn't matter if the Fed cut. Rates are not going down. It's the exact opposite. Rates are going up. Okay, they go up a little bit further, just a little bit further, like 4.2%. That's why I'm talking about it, right? They go up, they go to 4.2%. All of a sudden, the entire marketplace starts to pay attention again. I'm telling you, okay, on this evening's video, this is my primary focus, is this bond market, because we're only a hop, skip, and a jump lower before the entire market starts turning its attention and goes, holy crap, the interest rates are going up again. What does that basically mean? Okay, debt levels, the U.S., people are going to start talking about like how they're unsustainable, especially in a higher interest rate environment. And as long as these bonds are seeing sell side activity, that's a higher interest rate environment. Okay, and that would immediately start to translate back into the S&Ps. So keep eyes on, because it's, I try to get ahead of the curve on what the marketplace is going to be looking at. And if you're kind of curious about the trade, more sell side in the bonds. If you get more sell side in the bonds, okay, it's short the market. You short the financials. You could probably start to short, even some of the tech sector, but there's some lower hanging fruit that I will discuss, of course, tomorrow, of course, on TheoTrade. All right. Switching things up over here, once again, let's go back to the SPX. The SPX, the mother of all products. Where are we on the week? Well, here's another kind of interesting aspect. We have neither hit the upper or lower edge of the expected move. Expected move this week is right around $106, right? So what that basically means, you're expecting us to move up $106 or down $106. There's an incredibly high probability of hitting the upper end or lower edge of the expected move. We're a bit more than halfway home, okay, to that, if you will, lower edge of the expected move. So we rallied back up a little bit today and faded into the close to some degree, but okay, we're again, okay, where are we? Out in the middle of nowhere in here, okay? A little bit of a fade, and when I say a fade, the lower edge of the expected move, okay, is right around 67.35. Again, it's about 67.35. So yeah, some sell side activity would bring us there, okay? But as I said, we're about halfway home. This morning, we're even lower than that. You can probably say that an overnight trade, if you included the futures and overnight trade, kind of touched down into it, okay, and rallied back out of it. But if you're looking for a specific level, and this is to the SPX, okay, if there's any more sell side activity in the marketplace, look for us to go right into it, all right? That's that 67, okay, 35, maybe as early as tomorrow. Speaking of tomorrow, what's the marketplace hold in terms of risk? So as I said a moment ago, there's about $106 of expected move for the entire week, okay? But coming just into, the remainder of the week, this surprised me. I was just looking at this a minute ago before kind of hopping on here and recording this. What surprises me is the entire week held this $106 move. Again, the entire week holds a $106 move, but there's still some $63 packed in, okay, just for Thursday and Friday of this week. Still a lot of risk on the table, okay? That's something, again, you want to, keep focused on because, as I said, the range in overnight trade is absolutely monumental. When you listen to anybody out there, you would think that the marketplace was coming apart at the seams. Meanwhile, S&Ps finish marginally higher today. The NASDAQ has a pretty good day. But as I stated, a lot of risk on the table, a lot of expected move left in the remainder of this week. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.